Today we'll learn how to trade with a rising interest rate. Three parts here. We will discuss about the relationship between a rising interest rate and how will that impact the stock market. The second part on how to hedge in an uncertain market with the expectation of rising interest rate. And the last part, how to trade in a volatile market with rising interest rates. What presented here is not a recommendation. Please consult your licensed broker. Our mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk with market uncertainty and a bolder risk when opportunity arises. This is a relationship between the interest rate and the stock market. As you could see that on the upper window is the interest rate over the last 42 years. In fact, the interest rate, the US interest rate, or I would say is a global interest rate, has peaked at 1982 and 40 years has gone on. I want to draw your attention to look at the relationship between the interest rate and the stock market, the Dow Jones. Now, as the interest rate traveled down over the last 40 years, that you could see the asset class also start picking up. Now, so we could see that the market watchers, and of course myself and many of us, we are concerned about one thing, is that the trend of the interest rate will the next longer period of the time, whether the interest rate will start to trend up. That's a concern because there's an inverse relationship. As interest rate trend up, then the asset class, especially in the equities market, will also have a lot of headwinds. But we could see that over the last 40 years, how old were I when I was in 1980? I was, how old was I? I was 8 years old or 10 years old. So now you can see that I have grown up. I'm 50 years old this year. I've grown up to experience that asset class has been always going up. So my mindset is that asset class, I've been conditioned that asset class will always go up. Now, which is not quite true because yes, over the period of time, you could see intermittently in 2016, as you could see before 2007, the interest rate goes up. But our experience is that asset will always go up. As interest rate pick up, no, asset will always go up. But we are looking at the major trend of the interest rate is downtrend. So our concern is that the next major trend for the US interest rate, is it going to hit up? And if that's true, that the next major trend, I'm talking about major trend, not intermediate trend, if it is going to go up for a longer period of time, then definitely a lot of asset class is going to have a lot of headwinds. And this morning, as I read, that some say that in 2022, we're going to experience more than 4. I read about 5, some say 6. Now I'm going to move on to using the same mapping technique. How about can we apply this technique to trading, a bit short-term trading? Now, first of all, let me just discover about should we consider hedging in this very uncertain 2022 and moving forward is still very uncertain, I believe. Just now we discussed in the first 2 slides that moving forward, I project that in a longer period, maybe the interest rate, the hype may not be just intermittent. It may be a trend changer. We see that over the last 40 years, been downtrend. But moving forward, I think the environment is quite conducive for US, especially for this downtrend interest rate to turn over for an uptrend for the next many years to come. Now, so then should we consider hedging? Definitely. And I would say that over the last 15 years or more, the landscape in Singapore have changed tremendously. We could see that all these hedging instruments are quite readily available to us. If you talk about 15 years ago, 20 years ago, all these hedging instruments are meant for the private banker, for the big customer. But even today, 15 years now, currently, all these instruments are available to retail investors. So it's good to know something about how to hedge and trade as well, especially in a very volatile, uncertain market. Trading to me is part of my portfolio that I have. Later I'll share with you in a short while. Let's talk about hedging. Now, this is a very interesting chart here, and all chart is interesting, yeah. So yes, of course, because I put in a lot of effort to gather all these information that is part of my portfolio just quite recently. Now, we could see that this NASDAQ day chart. And after enter 2022, which is here, 2022, in January, we all experienced there was a little meltdown here, and the meltdown cost most of us 18%. That's quite a bit within a short span of time. Now, so was there clue that before the meltdown came? Yes, there was clue. Then I was focusing on Apple, and today I'm still focusing on Apple. Why Apple? Because Apple is the largest market capitalization stock in the world, and so it's also in US market as well. Now we could see here, I posted this on my Facebook page. If you would like to, you can follow or like my Facebook page, which is my name, KONHOW. Now, I posted this observation on 14th of December 2021. So what was my observation back then? Now, you could see that Apple started to trend again in November to December. And December is almost broke its 3 trillion US dollars. And I think it broke in January. Now, so what happened here is that as it trend higher, I saw this some clues here that I circulated and posted on my Facebook and highlighted that or posted on my Facebook. I mentioned that there was 2 inverted hammer and also 1 bearish engulfing body. So my how I interpret is that yes, although Apple has been breaking new high, but I'm a little bit suspicious here is that I decode it as it broke new high. I also could see that there's quite a bit of offloading that's happening to the world largest shares. Yeah, so there's some offloading, so I'm a bit cautious and also very measured with my position on the US stock market. So Apple stock is a good benchmark. You should look at it as well. Now, so that was the first clue on 14th of December that we studied Apple, not just Apple, but other big tech company as well. So there's some movement that's going on. Now, that was the first clue. And then that was the second clue on the 8th of January. So towards the end of the segment, I'll share with you what is called the market divergence. So as a trader, technically it's important. So earlier you see that how I analyze the US, China, Singapore market more on the bigger picture. I also have to include the macro development as well. So once the technical and macro develop, it kind of come to alignment, I will have a better confidence in how I judge the market. Now, later on, I'm going to share with you what is market divergence, what is the second clue on the 8th of Jan in a lot of markets. Okay, let me just move on to the next slides here. All right, now the third clue is that we could see that over the span of the last few years, in fact, not just NASDAQ, but S&P and Dow Jones, they have a very nice smooth uptrend, almost linear as you could see here. But January 2022, it kind of, when it crossed, it kind of broke this uptrend support line, which I have to note that it's not just in NASDAQ, but we could see that in S&P and Dow Jones as well. So that gives me a third clue that I have to be very cautious. And of course, if you align with the macro development, and we all know that in 2022, Federal, somewhere in December, they have mentioned that the inflation is no longer transitory. Inflation is here to stay. And then in 2022, I think it's the beginning of this new interest rate trend. We just got to observe how it goes. So this is the third clue, not just technically, but we look at the macro. We all know that 2022 interest rate will continue to hike. Okay, now, so should we consider, I think I missed out about hedging, right? Yeah, so sorry about this. Now, let me just go back here about hedging. Here's that relating Apple and indices. How do I hedge? Here is that I got so carried away about not to mention about how to hedge that. Now, the thing is this, sometimes when the whole stock is, these stocks are very precious to us because we could measure its value, we could forecast its earning, all this and that and that. They may have dividends that pay to us. So, but however, when we look at the indices, we have a different feel. We analyze it differently, that we felt that market may be toppish. Now, but yet you're holding the stock. So how do you hedge is this? Now, you're not exactly sure because the stocks that you're holding, maybe it's US stock, but if you look at a bigger market, the NASDAQ, say for example, like this example, that you felt that the market may have a lot of headwind, likely to head down short term, it may develop the long term. So now there's a dilemma here, then hedging became an important tool. How you could do that is that if you still enjoy holding that stocks, because of certain intrinsic value, and it make a lot of sense to hold that stocks, but you know that the bigger picture is starting to get weaker. What you could do is that you may continue to hold the stocks, And then you could use the indices, derivatives, to sell short the market. If you analyze very strongly that there's a proposition that the next few weeks or next few months that the market is going to head down, but you still like your stock. So what you could do is that continue to hold your stocks and do a sell short in the indices. Then as the market happen and you find that the market have reached its base, you could unwind your indices, say for example, and that will create a hedge for your position. It's just a very quick note here, but I would just want to focus on the topic here tonight is that the next one. Should we consider trading? Definitely, especially for 2022, because we discussed about the whole market is going to get very uncertain, very volatile, definitely. Has it entered into a decline stage? Yep, there's some clues that it may have already entered into a decline stage. We just got to keep watch. February month, January month give us quite a big clue there if whether February and March is going to continue or resume its uptrend. So it's a quite important month to take note of the price behavior development. Now let's look at the market itself. Now what is trading? Let me define what is trading. And before I define what is trading, maybe I define what is investment. We have to have a clarity between the two, what is investment and what is trading. Because in this space that we are all here today in the market, most of us have one mission is to make money. Yeah, that's the end product of it. But let me just share with you something that's very important. I use it is planning is very important. So in every trigger that I make, that I hope to advocate this, that in every decision that you make in investment, you have to be very clear, what is it for? Is it for investment or is it for trading? Now, let me give you an illustration here. Now, for investment is that how I define investment is this definition here. I define as I'm buying into an perceived value right now. So whatever you invest in, we are not exactly sure, but of course we do our homework. So at this point of purchase, if I'm buying into a perceived value, given time, I believe that the market will appreciate. Now, usually what we look for is that we hope to achieve at least 10% gain, 20% gain. And if hold long enough, the company double, to make 1/4 or 2/4 return, it is very possible. But trading is very different. I'm going to define what is trading in a short while. So now trading is very different, is a skill base, very much on price behavior, technical analysis, that I'm going to apply what we've learned over the last 3 series to trading here. That we got to be skillful in managing volatility. I'm going to explain to you very shortly using the mapping technique that we learned in the market tonight. Now, so we understand about how you, or maybe you understand about how I apply this income, value, growth, and decline. Now, this is a 15 minutes chart on SIMSKI. Now, what is SIMSKI? SIMSKI is being it mean that is Singapore Morgan Stanley Composite Index, so it's very similar to STI. Now I have a work for you here tonight, is that can you identify the 4 stages between income, value, growth, and decline? Just gonna give you about a few seconds, quickly identify that. I'm gonna reveal the answer to you very shortly. Okay, so whether is it investment or trading, how I apply this, why is it important for me to try to map at this particular point? I try to map exactly where we are today. Then I will know exactly what kind of risk to take, how long I should hold it, or what kind of risk should I take. If it's income, I will do range trading. I'm not too, if I find that the income is going to be prolonged, I'm just going to do this range trading for a while. Just like Singapore market for the last how many years was that? 40 years it's been range bound, especially the last 14 years. It's been range bound between about 2005 to 2005. Now you could see that even for the short term, there are this behavior in a short term market. Market will range in income stage. Then sometimes there's a breakthrough. It break away from the range in the value stage. And it could sustain this break away. It will enter into a growth stage. But once the growth stage got a little bit tired, it may enter into a decline stage as well. Okay, so I'm going to give you another example here on the S&P, and that's quite latest, it's quite recent, that we could see that this drop, it was happened in 2022 January, this drop in S&P. Now, same thing, I'm going to ask you to take a few seconds to identify between income, value, growth, and decline. Could you do that? Okay, I'm going to reveal to you right now. Okay, so that's income, value, growth, and decline. So again, why is this important? It helps me a lot. That means at any particular juncture here is that when I decide to trade, I have to try to discern at this point, where is it right now? So it's helpful to me to make a decision. Should I load a little bit more, or should I be very cautious? When should I load a little bit more, especially when it crossed the value stage and I could sense that it's developing into a growth stage? So that's the point in time that I would prefer to load a little bit more. That where should I be a little bit more cautious is towards the end of the growth stage, especially a bit euphoric, that you can see here, and especially when there's divergence, where I'm going to share with you very shortly in a short while. Now, this is a bit challenging. I know that you find that, well, how to identify income and value, but what you can do is that I give you an introduction here, but what you could do is that take your time to practice. We all need time to practice. Just continue to practice. So basically for income stage, as you could see in this S&P, is that as long as you could see that the market range bound within a range, not moving anywhere. When I classify as income, doesn't mean that you'll pay you a dividend. Income, it just means it's range bound, that's not moving anywhere. It means that market are generally lost in the main direction. So it became range bound income. Then value is a breakthrough. Yeah, it break away from this range bound. And if they could sustain this break away, it may develop into uptrend. Okay, so same thing, when it start to get a little bit range bound, it may enter into a decline stage. So you take your time to practice it. Yeah, just know about this. Then maybe gather 2 or 3 friends, do some project here. You can email to me, of course, if you see something interesting. All right, so now 8th of Jan is something interesting here that I'm going to share in a short while, is that we saw market divergence. Okay, now let me just talk something about trading here, discuss something about trading here, is that I have this term, just now we identified the definition about investment, is that buying into a perceived value given time. I hope that you appreciate, but trading is different. So earlier also mentioned about the profit target for investment, maybe 10%, 20%, or even 1/4 return or 2/4 return, or some even 10/4 returns. Yeah, but trading is different. So what kind of profit target that you hope to achieve? If you ask for 10%, I think it's a little bit too greedy. What I mean by that is that because when you come to trading, and definitely in 2022, there will be a lot of opportunity here because the market is getting volatile and uncertain. Now, when I target for trading, the profit target for trading is not about 10%. Maybe you'd be surprised to you that it is a lifestyle that I will target for about 1 to 2% gain each time. Now, if I have a $10,000 trading fund, 1% is about $100, 2% about $200, sometimes 3 if the trend is right. Now, so you may find that it's too little, but you have to understand that trading is more like a lifestyle, it's more shorter term. So it is all right to achieve and accumulate 1 or 2% gain each time. And similarly, I mentioned here that it is achieve a consistency in my performance in profit, which is 1 or 2% accumulated. But in the same measure, if I have to risk it, means I make a wrong judgment, I have to risk it, I lost it. So in the same measure, I also have to lose. I'm prepared to lose about 1 to 2% each time. So that's trading. But I will try to focus on making more win and lesser loss. But each win is about 1 to 2%, and each loss about 1 or 2%. But more win, you accumulate the gain. So to me, that's a trading game, a trading campaign, right? So I'm just introduced that we can participate in part of the volatility. Hopefully, some clues that I've given to you, you'll find it's enjoyable and exciting to explore on it. So these are volatility again, that if you can identify the stages, especially after value, you may want to write a little bit more to participate in a trend. Now, so same thing, there are divergence going on 8th of January, which I'm going to share with you what is market divergence. Now, but before that, what are the common questions that I receive when it comes to trading? So most of my friends an associate asked me that, Con, how should I study into 5 minutes, 15 minutes, 60 minutes chart? So which time frame should I be using? Now, so my answer to you is that no, you should not restrict yourself to whether 5 minutes, 15 minutes, 60 minutes chart. You got to examine yourself as an investor, as a trader. Who are you exactly? What kind of lifestyle you have? Now, if you're going to trade, do you have the time to do that? So if you're going to look at a 15 minutes, you got to glue yourself to the screen. So do you have the time and capacity to do it? Do you have a lifestyle to do it? So if the answer is no, maybe you're still busy with your life, your career, then you should not go into trading so much. Yeah, maybe you should consider into some hedging. So you have to identify who you are, what you want to do. Then you go and look at the different time frame. Now I have this. I wrote this, created this model. So what you can do is free. You can do a QR code scan here. I wrote this article and some survey here. You can do a 10 simple survey question to identify who exactly you are. So I have this 4 quadrant. You can go and study on them. I'm all 4 of them. Yeah, so I have 4 portfolio. I hope that is helpful to you. It's called Invest Right for Your Trade Time. So what you could do is that after this, very shortly, after this presentation, you can attempt this 10 questionnaire. Okay, I'm going to move on to the next screen. Now, so this is what I have posted on Divergence on 8th of January. Now, it was first discovered on even before that, 26th of November, but I reposted on the 8th of Jan because the divergence is still there. Now, we studied the Apple, Amazon, Tesla, Google. Now, so what I mentioned here is that what exactly divergence is. Now, I mentioned that divergence is a bull market in this case. It represents that the bull is losing its momentum. So keep a lookout for trigger points as it may cause a major shift to its market dynamic and trend. So earlier, we mentioned about the NASDAQ on 8th of Jan. So that's clue 1, this is clue 2, and clue number 3 is that it broke this trend line. So the next, this month, February, March, we got to watch it very closely. With the interest rate hike, I think it will be very challenging for the stock market to resume its uptrend to break the all-time high for NASDAQ. It will be quite difficult, but we just got to continue to keep track of this development. So this is S&P even for 180 minutes chart. It works as well. That's the 8th Jan. Let me just pinpoint to you. So I'm not saying that you have to use market divergence, but I just introduce you to different ways of analyzing. Hopefully that will trigger some interest in you for you to dig in further to discover it for yourself. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights to be updated with my latest video. Subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.